Hey everybody, it's Amanda here at Rise Title. And last week we had the pleasure of closing the first all-in-one loan in the state of Texas that Tyler originated. And we spent a little bit of time yesterday talking about what this loan program is, because it's just completely different than anything else that's on the market.
It is, 100%. It's a totally different way of thinking about mortgages in general. And it also sometimes takes once or twice to fully understand, but it's fun to watch people whenever they do get the light bulb moment. There's kind of that proverbial light bulb that tends to go off when somebody finally gets it. So it's been fun sharing this with a lot of people.
Well, awesome. I'm so excited. Well, thank you for joining me today.
Absolutely.
For talking to me about this. So I guess we'll just start kind of from the beginning. I've got questions that I think agents may have. What's an all-in-one loan? What is it?
Sure. Yeah, that's kind of the natural place to start, right? So the all-in-one loan, and this is how I typically start it whenever I'm talking to large groups, small groups, is you have to kind of break it down into a couple of different steps. So first of all, the all-in-one loan is the only principal paid first mortgage in America, which is really unique. And as a result of that, it's actually the only mortgage in America that puts the borrower first. So it's kind of making the bank take a back seat, because traditionally mortgages with regular standard 30-year fixed rate mortgages, what's happening is you're paying about 50% of the interest on the loan within the first 10 years of the loan.
Yeah.
And so this was a completely different way to rethink how mortgages should be done, at least in our view, to be able to give the borrower a number of different options as far as saving the amount of money that they pay on interest with their mortgages.
Yeah, I mean, it's just completely consumer centric for the first time, right?
It is. And there's kind of this moment too where there's, how Steve Jobs used to do the, but wait, there's more kind of thing. There's kind of more and more of those, but wait, there's more moments with this. But I think the one thing that gets people really, really excited is that not only is it going to save you an enormous amount of money from an interest paid perspective, but it's also going to give you 100% unrestricted access to the equity in your property at any given time for any reason, with no additional cost, no fees, no anything. So we're basically giving people access to their largest source of wealth, and we're making it liquid. Because ultimately that's been the biggest problem with everyone holding most of their wealth in a real estate asset, is it's illiquid. This changes all of that and gives people access to it on an unrestricted basis.
Oh, I can't wait to dive deeper into that in just a minute. But I think before we do that, one of the questions I have is, who's an ideal candidate for this? Who are the best borrowers for this all-in-one loan?
Yeah, I think that's a really good question. It's also kind of a complicated question, but in general, this loan is good for a number of different scenarios. On a high level, it requires certain things. So it requires a 20% down payment on a primary residence. It requires a 25% down payment on an investment property. So those are the scenarios where you can immediately take the FHA borrower with 3.5% down out of the equation, because this loan just wouldn't fit. But anybody who has that amount down, and I would say uses a checking account and spends out of it after they have their direct deposit come into it, is a good candidate for this type of a program, because it's allowing you to use that same standard of living in the same way that you operate by having money come in and then spending money out. But it's letting you flip that on its head and reduce the amount of interest that you're paying on the mortgage by living in the exact same way.
So what is the average, what is the average savings that a borrower has on a program? So
savings is going to be a little bit tough to quantify, but it's in the hundreds of thousands in most cases, in most scenarios. So what's really interesting about this, and I think maybe what's even more advantageous than just the savings alone, is how quickly they pay it off. And so the average all-in-one loan gets paid off in about 10.5 or 11 years. As compared to a 30-year fixed rate mortgage. And it's not necessarily that it gets paid off so quickly, it's that you saved so much interest by paying it off so quickly and by living no differently than how you would normally be living or operating. It's just a new way of letting your own money work for you and not for the bank.
Well, you mentioned that this is a line of credit. So tell me, when you pay off that principal reduction, do you lose that line of credit at that time too? So then the only way to liquidate would be to do another cash out refinance?
Yeah, really good question. So I think, I don't think CMG in general would be super happy with me saying this in this way. But I call this the cash out refi killer. Because the idea is that you don't ever have to have a cash out refi ever again, because I'm giving you unrestricted access to that equity at any time. You can draw on it, you can pay it down, you can pay it off, you can draw on it again, pay it off. And so it allows you that fluidity to be able to do something like that. And then at the end of it all, whenever it is paid off at a zero balance, You pay absolutely nothing for it, and you leave it open, and you have full access to that line of credit in perpetuity, really,
and
for 30 years.
What an incredible investment vehicle to be able to have that access and one of your greatest assets, right?
It's huge. Investor clients have been sort of the first people to kind of jump on board for a number of different reasons. Number one, it's the only way that investors can have a line of credit on an investment property. There's no other way. There's no other product in existence that allows an investor to draw against their asset, their investment property, as a line of credit. Which is hugely, hugely beneficial. So right there, it's kind of one of those only statements where it's like, it is literally the only opportunity for you to be able to do something like this.
Buy now.
Yeah, exactly, yeah. We call them only statements, but yeah, buy now statements work too. But that has been really one of the watershed moments is whenever investors realize what this is looking like for them, because it's the only way to access this. It also allows you to revert back to an interest-only payment. So, for investors who are doing Airbnbs and short-term rentals and things like that, you have good months and you have not so good months. And so this allows you to hammer down on the principal, save the interest, and then even revert back to just a straight interest-only payment. So it's been hugely beneficial for our investor clients too. They were kind of the first ones.
Yeah. Well, and you mentioned that you can do this on a primary residence and an investment. Is there how many of these loans can one borrower have?
This is my favorite question. Is whenever you have a presentation and then the question is not, do I want this loan? It's how many can I have? And weirdly enough, that's actually been a really common question with the all-in-one loan is how many can I have? Right now, you can have up to 2 investment properties with an all-in-one loan. You can have 1 primary residence and you can have 1 second home.
Okay.
So plenty to go around, from an all-in-one perspective.
So what is the maximum loan amount that these loans are available for?
Yeah, so in writing, the maximum loan amount and the maximum line, in this case, is $2 million. We've done loans as high as $5 million, and I would imagine that we'll probably go higher than that at some point. But above that $2 million threshold is where we have to take it on a case-by-case basis.
Right.
But we've had a lot of success with ultra high net worth clients and high net worth clients going above that $2 million loan threshold, because in a lot of cases, and obviously in Austin, we're starting to creep into those higher price points where all of a sudden $2 million might not work. Right. So it's on a case-by-case basis, but we've done plenty of them.
So they just require specific underwriter review.
It does.
Yeah, perfect. You talked a little bit about that line of credit, but can you tell me how that line of credit is built or how that increases throughout the life of a loan like this?
Yeah, absolutely. So on a traditional mortgage, anytime you make an extra payment above and beyond the principal balance, you lose that money, right?
Right.
So if you double pay your mortgage, there's no way for you to get that money back out again. So what this allows you to do is continuously pay down that principal balance. But what's unique about this particular program is not only are you paying down the balance, but it's the only loan in America that basically recasts and recomputes your interest that same day. So real estate agent gets a $20,000 deposit from a closing on the 3rd of the month. Mortgage payment's not due until the 21st. By allowing them to transfer their money into this particular account, they're immediately seeing that interest savings based on the reduced balance of that $20,000 commission. And so that happens time after time after time. And so it's compounding in the client's favor instead of working against them for however many days it's left in that account. So it's hugely powerful to be able to exercise that ability and use it, in that respect. And I think, for a lot of people, it's easier to conceptualize. So if you just have, a chunk of money that's sitting in your checking account at a big bank, you're getting 0.02% on your money. What I'm saying and suggesting and offering really is with the all-in-one loan, you are going to get a rate of return that is equal to the interest rate on your loan, because it's immediately recomputing and calculating that interest on a lower amount, and therefore you're reaping the benefits automatically and at midnight every night whenever it refreshes and recaptures the new loan amount, you're saving that exact amount of interest on the loan.
Which isn't just mind-boggling, right? Like to be able to access that money. So how quickly can you pull that money back if you decided that something happened catastrophically?
Sure. So these are tied to an intermediary bank account through either North Point Bank or Merchants Bank. And so that middle account, you can get a same-day transfer from the all-in-one loan into that particular account. Now, a lot of people don't want to have to set up new auto pays and set up all of these new things. So the real benefit here is that you also have the ability just to link that to your Chase or your Wells Fargo or Frost or Schwab or any of those major banks. And one question that I normally get to is, is this secured? What's the risk of me holding my money in something like this? And that middle account is all FDIC insured, just like a normal bank account would actually be. So there's no inherent risk in doing something like this, which is pretty crazy because you're effectively gaining all of that interest savings by adding no risk and really living no differently.
Yeah, absolutely. And so I think, we hear in this business oftentimes with creative financing, which happens in a market like this that we're in, right? If something sounds too good to be true, it is. So I'm going to ask you, what's in this for CMG? Like, why are you guys doing a loan program like this that puts the consumer first?
Yeah, I love this question because one, it's a really long-winded answer, which typically fits into my MO. So I'll try and keep it short and sweet. But in general, I think the idea was we think that the 30-year fixed rate mortgage might be a little bit broken.
Yeah.
And so we looked at the statistics and we saw that 9 out of 10 American homeowners have a 30-year fixed rate mortgage. And the way that we normally start these big presentations and how I start one of these presentations in front of a large group of people is I look around and I ask everybody, what do you think the chances are? What do you think the possibility is that all of us share the same political beliefs? What are the odds that we all have the same financial or socioeconomic upbringing?
Right.
What are the chances that we agree on anything as a whole? So the question really became, why does everybody have the same mortgage? Why is this the only way? Why is this the best way? And we looked at it and we realized that it's actually not the best way. The best solution for people is to be able to give them a loan product that is unique and tailored to their own life situation. One that gives the borrower and the buyer control over how much interest that they pay to the bank. It's their money, and nobody's allowing them until now to be able to put that money to good use in a way that is incredibly beneficial for everybody. We're not a charity.
Yeah.
So, we are not doing this loan for free. We are not making any money on it. We make less money on all-in-one loans than we do on a regular 30-year fixed rate mortgage. We've even gone to a lot of, unnamed big banks, and they turned us away as being a partner because they said that they couldn't make as much money as the 30-year fixed rate mortgage. So it's the right question to be asking, but the number of people that we've gained access to from a market share perspective and the number of people who are extremely excited about this and the fact that we're a privately held mortgage company, we can make decisions like this that don't always put the bank or the investor first. And so it's been a really powerful experience and it's reignited my excitement, as a mortgage lender, to be able to have a product that's so unique and so helpful for people.
Yeah, I think it's incredible. Markets that we're kind of seeing the start of something changing, right? Markets like this are what kind of rejuvenate me in this business and my career, right? You start to learn and come up with these creative solutions and hear about things that are just completely counterintuitive to what is the foundation of our business. And so I just wanted to take time today to just let everybody know what's out there because my mind was absolutely blown when you shared this with me.
Yeah, it's really exciting and it's been really nice to be able to go out and talk to so many different people from financial advisors at top advisement firms, all kinds of access to different real estate brokerages and things like that and just regular people. It's been interesting to hear. It's fun for me to sit back because as people get that proverbial light bulb, I think it's really cool to see what they come up with. Why this particular mortgage is going to be better for them because it's different and unique for everybody. Can I pay for my kids' college out of this account? Yes. Can I, put a pool in? Yes. Can I make another investment in an investment property? Yes. So it's been really cool to hear the feedback from a lot of different people from all different walks of life with how they're going to actually use this loan.
Yeah, well, I appreciate it. Thank you so much for your help. If you guys have any questions, Tyler Hughes, CMG Mortgage, he is your guy.
Thanks.